Hello, traders. It is Wednesday, May 20th. It's after the market close, and it's time for your favorite hour of the week. Yes, it's time for the weekly swing trading video. If we take a look at what's happened over the course of the last week, from the time that I recorded last Wednesday, conditions have changed pretty dramatically. So, we had a big market decline and this reversal, leaving a long red candle off of a relative high last Tuesday, closing on the low. Pretty bearish stuff. Wednesday, we had follow through selling. The market closed off of its low, but still very weak. Thursday, the market opened below the low from Tuesday, and we really came down and we tested a horizontal support level right here, just above SPY 272. But the market rallied back off of that low and it closed on its high. Pretty positive showing, and this was on Thursday. Friday, we had a really nice rally and a close near the high. So this is pretty bullish price action off of the low from that range. Now on Wednesday evening when I did my video, I said, the market's still trapped in this range right here. We've got the high right here. We've got the low right here. I'm expecting us to chop back and forth. I'm not looking for a big market decline, even though the last 2 days have been very bearish. And so my instructions to all of you were to exit our trades for Hasbro and McDonald's and to try and lock in a really nice profit of 50%. Some of you were able to do much better. Personally, I was able to make 60% on those trades. So on Thursday, we exited those bearish positions, and lo and behold, the market took off and rallied up to the upper end of the range. Now, I wasn't looking for us to break out necessarily to a new relative high, but that's exactly what happened. And I also did not expect the market to gap higher Monday and to be able to hold all of the gains and to actually close above that critical SPY 295 level. But it did. All of a sudden, Monday, everyone decided that the economy is getting back on track. There was news that there was a vaccine that looked very, very promising. Moderna said that they would have somewhere in the neighborhood of 200 to 300 million doses available by year end. So everybody was out buying. And we had a little bit of a pullback yesterday off of the high. We'll take a look at that 5-minute chart. And that was on news that Moderna's trial had not gone quite as well as they thought. And you can see this heavy round of selling right in here. But today, market completely discounted that news, completely forgot about it. Boom! Big gap right back up above that 295 level. And you can see how we rallied through the course of the day and even were above the 100-day moving average. So let's take a look at that 100-day moving average very quickly. This is a resistance level. You can see how the market closed right at the 100-day moving average. And looky there, the 200-day moving average is within striking distance. We are only about 25 points away from the 200-day moving average. What's 25 S&P points? That's nothing. So it's very likely that we're going to test that 200-day moving average. There's a good chance that we might even do it this week. There tends to be buying ahead of a major holiday. There's usually some optimism. And right now, the biggest news is not that there's a vaccine that's going to be available to us by year end. There are so many biotech companies that are scrambling right now to find a vaccine. And there are dozens and dozens here in the US. Globally, there are hundreds of them. They are all trying to find a vaccine because this is a global pandemic. So I'm not as concerned with the news from Moderna. What's much more important to me is that the economy gets back on track right here and right now. And we had states that were opening a week to 10 days ago, and healthcare officials were saying, oh my God, they're doing this way too early. We're going to see a huge spike in the coronavirus. Well, what's happened? We had news from Florida that over the course of the last week, their new cases of coronavirus actually declined by 14%. Georgia, same thing. They had a decline of 12% over the course of the last week. Both of these economies are open for business. So other states are watching this very, very carefully. And now they're getting much more progressive with their reopening. People are sick and tired of the shutdown. They want to get back to work. They're not afraid. We needed this clarity. Back in here, when the market was sideways, we didn't know what was going to happen. We needed to wait to see how all of this was going to play out. Now we have a little bit more information, and we're starting to see that people are ready to get their lives back on track. But we still need clarity. Everyone's going to start gradually going back to work, and hopefully they're going to feel pretty confident that they have job security, and they're going to continue their old spending habits. We need people to spend money. We can't have them go back to work and not spend money, because what's going to happen is it's going to extend the recovery much longer than we hope for. So as long as everyone gets back on the job and they spend, things will start to gain traction and the economy will recover. So that's the premise that asset managers and investors are going on right now. And the other thing that is providing a safety net to the market is the Fed's liquidity injections, their quantitative easing. And in a 60 Minutes interview last Sunday, Fed Chairman Jerome Powell said there is so much more that we can do from the Fed standpoint, but we want to wait and see what happens with all that we've done so far. And on a federal basis, you've also got another $3 trillion worth of stimulus that has been approved in the House. Now, Republicans are not going to pass that in the Senate. They also want to see what's going to happen with everything that we've got out there so far. And we know that there's going to be some waste in the PPP. They want to have a chance to evaluate it, find the holes, patch it up, make sure the money is getting where it needs to go to small businesses and to workers. So that's why they're going to hold off. But the bottom line is, if this recovery is stalling out and it's not happening quite as quickly as we hoped that it would, you're going to see additional moves by the Fed. You're going to see additional stimulus from the government. So that is the big safety net. And asset managers know they can't make anything in fixed income right now because the yields are actually not keeping pace with inflation, which means that they're generating negative real returns. So you have to have some equity exposure. So right now, everyone is erring on the side of being long the market in hopes that the safety net is going to hold, that consumers are going to get back on track, businesses are going to get back on track, that this pent-up demand that is going to be seen when everybody returns on the job, that's going to roll right into new demand that's going to be coming for products and services. That's how the market is currently viewing everything right now. I believe that it's a little bit overly optimistic, but we've got probably about 3 or 4 or 5 weeks worth of data and information that's going to be coming in. And for the time being, the bid is very, very strong and the market is rallying through this resistance level. And I believe that we're going to see it challenge the 200-day moving average. I think there's a good likelihood that the SPY is going to break above that 200-day moving average in the course of the next week or two. So yes, I am bullish. And yes, my bias has changed over the course of the last week. I've been mentioning to you that I need to see technical confirmation, be that on the downside with a breakdown or on the upside with a breakout. I also need to see more information so that I can get clarity. I'm getting clarity, and that means that I need to adjust my positions. And that's exactly what we've had to do over the course of the last few weeks, over the course of the last few days. With the win position, we're also going to make an adjustment on SHAK. So I'd really like to start off with this image here, and let's bring it over here, and then let's increase the size a little bit so that everybody can see it well. And so these are some of our trades. I want to highlight the winners that we had last week. The Hasbro $60 puts that we were long, and then the 55s that we were short. That was a put debit spread that we had purchased. We bought that for around $1. We were able to sell it for $1.60. I wrote 50% profit. Probably better for most of you, because if you waited even a little bit on the open Thursday when we entered that trade, the market was way up and you could have bought that put spread for a little cheaper, but you should have at least been able to make 50% on that trade. McDonald's, we were long the 165 puts, short the 160 puts. We were able to make a 50% profit on that. We were able to hit our target of $1.60 that Thursday. Both of these spreads, by the way, traded much higher. So if your entry was a little bit higher and you still went with the 50% target that I had mentioned, you should have been able to get out and make that kind of money. So really, really nice exit, really nice trade for us. And we had new information. So we were in the trade and we were out of the trade. I did have one of you ask me last week, Pete, why did you sell those spreads? I mean, why aren't we trying to get the maximum out of that, the $5 maximum? Well, the reason for that is that I didn't feel that the market was going to fall that far and that these stocks had that much downside potential. So every trade that I get into, I have to evaluate what my market expectations are and what my expectations are for the underlying stock. These stocks did exactly what I wanted them to do, and they went to my target, took our gains, we're on to the next trade. So we also had a win position this week. Now I sent out multiple emails to you to exit this trade. I posted the bulletins in Option Stalker. So I hope that between all of the communication, you were able to exit this trade. Now, those of you that acted on the win trade yesterday immediately, you were able to buy those calls back. I believe we were buying them back at $2.70. And those were the $85 calls that we were short. And that is the May 29th expiration date. And we bought them back for $2.70. The goal was to sell the $86 calls that we were long for $2.70. So we buy the 85s for $2.70. We sell the 86s for $2.70. We initially put that spread on for 20 cents, and we're able to keep that because we bought and sold those options at the same price. We originally put it on for 20 cents. 20 cents divided by the dollar between the strike prices and the 80-cent margin requirement yields a 25% return. So that was a nice trade for us. If by chance, and yesterday afternoon, I sent another email because the stock was running. It was running hard and I wanted to close that trade down. And so I sent an email out and I said, just buy back those $85 calls on win at the market. Do it right now. And when you're filled, set an order, GTC, to sell the $86 calls at that same price. Well, some of you might have been stuck in that position overnight, but you were pleasantly surprised because you would have been just long the win $86 calls. You would have been pleasantly surprised when you came in this morning because the stock took off and it traded much higher, and you were able to get out for much better than that 20-cent credit that we originally had gotten. And so I checked the price yesterday. The high price after I sent that second alert was $3.55. And this morning, the $86 calls opened higher than $3.55. So all of you should have been able to get out of that spread. I hope that you're all able to get those emails because that's the way that I need to communicate with you if we have to make any type of adjustments. And I'll also be posting everything in Option Stalker as well. So please watch your emails. If you didn't get the emails, make sure that you're approving all emails from info@oneoption.com, that they're not ending up in your junk folder or that they're not being marked as spam by your internet provider. So very, very important that you're able to get these emails because I need to be able to communicate with you. I do have an opportunity right now to tell you about another spread that we're going to be exiting. Everything's changed in the course of the last week. Since the video recording last Wednesday, we've got an awful lot of optimism in the market right now with the economy starting to open. Restaurant stocks are starting to catch a bid. I think that they're going to eventually be a good short in another month or two, but we have to get out of the way of this momentum right now. So what we're going to be doing is we are short a Shack June 19th 55 call, and we're long the June 19th 57.50 calls, and we put that spread on for 50 cents. So we're going to try and reel this in, and we're going to try and leg out of it. We've got lots of time between now and expiration, so we don't have to worry too much about time decay. You can see that the expiration date is June 19th. So we've got a good 4 weeks before expiration. So what we're going to be doing is we are going to be buying the SHAK June 19 $55 calls for $2.50, good till cancel. That is an order that you should place immediately tonight. When we are filled on that order, you will place a second order, and that is to sell the Shack June 19 5750 calls. These we're going to sell for $2.05 GTC. Well, why $2.05? Well, if you figure that we got 50 cents for the credit initially, we could actually pay $2 for these and be at a break even. I want to sell them for $2.05 because I want to at least be able to make a nickel. I want to keep our win streak going. I can't even remember when we had our last loser. I know it's been way over 2 months, and we have just been nailing trade after trade after trade. So let's try and make money on it. I want to keep that win streak going. I think we'll be able to. So before I do anything else, let's take a quick look at those two trades. Take a look at win and how we legged out of that and why I legged out of it. I don't typically like to leg out of positions. Now I'll do it as a trader, but I've got the ability to act very, very quickly when I have to communicate to all of you. And I know there's a lag between how long it takes me to produce the email, send it out to you, by the time you open it and read it and act on it. And some of you might be at work, so you can't do it right away. I understand all that. So this is not my preference to leg out of something, but when I see a situation that's deteriorating and we're on the wrong side of the trade, we've got to try and adjust. So here we had the stock gapping up Monday. It was able to hold its own, and we have this downward sloping trend line right here that you can see on win. And I watched the bid of the stock all day. I knew that it was starting to move higher. So yesterday, I wanted to make sure that we bought it back. I'm going to go into that 5-minute chart, and then you can see what I was looking at yesterday. And I saw very, very nice, steady price action. So this is the open on win. The stock started to really grind higher. I also saw PENN, PENN, BYD, a lot of the domestic casino companies were starting to catch a bid. So we were still below the high of the day right in here when I sent out the email. So many of you in the chat room were able to buy it back, and then we were instantly filled on the $86 call. So we were able to leg out of it beautifully. But then later in the day, I saw this price action, and I knew that win was really going to be a problem. It's going to be a problem trade for us. So while we were at the top right here, I was getting the email ready and I sent it out, and then whoosh, we had this huge market decline. I didn't anticipate this happening when I sent the email out, but it did, and that's what gave us an opportunity to buy back the win calls. So a little bit fortunate there, but through all of this, the high price was $3.55 on those calls. And so if you bought those back, you weren't able to sell the $86 calls for $3.55, but you sure were able to do that this morning on the open, because you can see in the first 5 minutes, the stock took out the high from yesterday, and those options were trading much higher than $3.55. So we legged out of it successfully. I'm glad to be out of it because I think win still has some room to the upside. Let's take a look at SHAK. This stock is not nearly as daunting, but I am starting to see some strength within the sector. And I'm going to go back to yesterday's chart, and here you can see how the stock actually put in a very nice day right in here. Nice orderly price pattern through the prior day's high. Everything looked good until that selling that we saw late day yesterday. And with the market gap higher today, the stock didn't just make up this, it actually was above the prior day's high. That's not a particularly good sign. I mean, that's a sign of strength. For us, it's not a good sign. But you can see that the stock is still choppy and it's still moving around. This is why we want to get out of the trade right now. And I feel that this stock is going to start gaining some traction, and that 100-day moving average is within striking distance. If the stock gets above the 100-day moving average, then we've got some additional problems in here, because then it starts getting through horizontal resistance and it could be off to the races. So we want to avoid that type of situation. So we're going to try and buy back our short calls on SHAK. And then we're going to leg out. We're going to sell the 5750 calls. The other thing that I've been noticing is restaurant companies like DRI. You can see how it's starting to catch a bid, and there's horizontal resistance on DRI right there. This is a restaurant company, Olive Garden, Red Lobster. So you can see everyone's getting pretty excited about these laggards. A lot of the travel and entertainment industry stocks have been running hard. I think they're getting way ahead of themselves, but they've got a nice bid to them. Even Disney had a really good move today. You can see how it closed above the 100-day moving average. I like Disney, and in fact, I had considered it for a possible bullish put spread, but I reconsidered. I just don't like the industry here. I think it's going to take a while for them to get back on their feet. So I didn't do Disney. So to recap, we've got some positions that needed a little TLC. We were able to get out of Win very nicely. We're going to try and leg out of Shack. And now let's take a look at some of our other trades. So you've been getting your money's worth. I've been sending a lot of trades out during the week. I've been sending those email alerts when I see something. And last Sunday night, I sent an email alert out on DBX. So you had ample opportunity to enter that trade on Monday. We had a lot of people that got in on that. NVAX was another nice one that's going to expire this Friday on the 22nd, and this DBX should also expire worthless this Friday, so just a couple of days away. So let's take a look at those. I'm going to put them off screen so we could take a look at the stock and the price movement. NVAX, there we were short the May 22 $36 puts, and we were long the May 22 $35 puts for a 25-cent credit, and we were selling those down below this horizontal support line right here in the gap. Beautiful trade. That's a 25% winner. Let's take a look at DBX. That's the one that I sent out last Sunday night. And here I'd mentioned to you that I liked this horizontal breakout right in here. I like the relative strength. I like the fact that the stock was making higher lows. And so we were able to sell the $21 puts and buy the 2050s and do that for a 10-cent credit. Really nice shape. So we've got 2 days left to go, and we're about $1.50 out of the money. I feel really good about that. That's another 25% winner. So let's go in and take a look at some of the other trades that we've got on right now. And we've got, now these are the new trades that we're going to cover today. LVGO and RNG are the other two trades from last week. So let's go back and take a look at those two. I'm going to put up LVGO first. And I loved this relative strength in here. Super, super strong stock. We went through the fundamentals. Fundamentals on the company look fantastic. And this gap is going to hold. And on that, we sold the June 50 put and we bought the June 45 put. And we did that for $1.15 credit. And we can bring that up right now. I'll tell you that that spread is trading somewhere around 50 cents right now. So there's a really nice profit in it. I would prefer to let the stock run a little bit and drain some of that premium out, but certainly if you can buy that spread back somewhere along the line for 10 cents, that's a nice gain. I would do that. You'll still make your 25% return on that. LVGO, really nice shape. RNG, the stock's a little choppy. I mean, we knew that going in. A lot of chop in here, but the overall direction is nice and strong. We've got this really nice horizontal breakout here after earnings, so I'm expecting that to hold. You can see how the stock has been able to find a little bit of support here the last couple of days, right at 264. We've only got 2 days left to go, and we're short the 255 puts, and we're long the 250 puts. So let's bring up the option chain here, and we'll take a look at RNG. Excuse me, we've got a week and 2 days left on that. But the nice thing, and one of the reasons that we put that spread on, was because we knew that we were going to be benefiting from the Memorial weekend holiday. You can see the bid-ask spread on these options is so wide you can't tell where those options are actually trading. This is one we'll probably end up riding right through expiration, but we've got plenty of room. We've got about $10 worth of cushion, and we get through this week. We come back Tuesday. Tuesday should be a fairly dull market day, so then that'll leave us with just 3 days left until expiration. If we've still got that $10 cushion, I'm feeling real good about that trade. So let's get on with this week's picks and see what we've got on deck here. So I'm going to bring this back in, and we'll take a look at the first trade. First trade is Facebook, and we're going to sell the 215 puts, and we're going to buy the 212.50 puts, and we're going to do that for a 50-cent credit. So let me bring that up, and I'll move this off screen real quick, and we'll bring up Facebook, and we'll find out why we want to do that trade. Well, first of all, we've got a huge breakout on Facebook to a new all-time high. So it's through this resistance level. There's another smaller resistance level that comes into play right here. So we're also going to be leaning on that. And we're going to go right below that 215 strike price on the notion that this gap is not some kind of fluke. They had news, good news, and so the stock looks like it has a full head of steam. That breakout came on big volume, and so I'm expecting this 215 level to hold. Now we're not going to go too far out in time. I like to keep everything inside of 2 weeks if I can. So these are going to expire in 2 weeks and 2 days. And let's bring up that option chain. And let's take a look at that trade. So we're going to go out to the June 5th expiration. Everything that I've got for you today is on the June 5th expiration. Because next week is a holiday shortened week, a lot of the time premium is starting to really come in hard. Everybody likes selling premium ahead of those holidays. So we're going to go to the 215 strike price. We're going to sell the 215 puts. We're going to buy the 212.50 puts. And we're going to be doing this because there's $2.50 between the strike prices. We're going to be looking to get a 50-cent credit for that. And we should be able to get that done. I think we'll be pretty close. You can see here the spread was 8 cents bid, offered at 81. We're right in the middle at 50 cents. I think we're going to have a good shot at getting that trade done. So again, we're selling the June 15th, we're selling the June 5 $215 puts. We're buying the June 5 $212.50 puts, and we're doing that for a 50-cent credit. Really like what I saw out of Facebook today. Really, really nice. So I'm going to go back into the staged orders, and we'll take a look at another trade that we've got on deck. It's a little bit easier if I use this screen because the font is bigger. So the next trade that we're going to take a look at is BYND. There we're going to be selling a 108 put, and we're going to be buying a 107 put. We're going to be using that June 5th expiration, and there's $1 between the strike prices, so we're looking for a 20-cent credit. So selling the 108s, buying the 107s. Let's check it out. BYND. We're going to go to that June 5th expiration cycle. And you can see how it's below the 200-day moving average. It's actually right at the 200-day moving average, so I always like selling below that support. And we're going to be selling the June 5 108 puts, buying the June 5 107 puts for a 20-cent credit, and we're going to be doing this on BYND. So what's so great about the stock? Well, let's take a look at BYND. And here's why I like the spread. First of all, the fact that we're able to sell a 108 put, that puts us right down on the 200-day moving average. And with the stock moving up like this 200-day moving average is going to start creeping higher in the next few days, and it will be up to 108 in a very short amount of time. As it climbs up, that'll give us a better little support level right there. But we've got horizontal resistance. Now it's support. That's the open right there, is $110. So we've got multiple support before we even get there. Plus, we've got this major support right here at the $125 level. If you take a look at these highs right in here, draw a horizontal line, it comes in at 125. So we've got support here, and we've got support right here, and we've got the 200-day moving average coming up, and we've got a stock that's got excellent relative strength. So I really like BYND. It's had a good head of steam. You can see how it's trying to break out to a new relative high. So that should be a really nice one for us. Let's keep going here, and we're going to put up this chart right here, VLO. This shouldn't come as any surprise to you. We're going to be selling a VLO out of the money bullish put spread. You know I've liked this since the market crash. I love refiners. I think that as the economy starts to come back, you're going to see the demand for gasoline and the demand for oil go up. So in this case, we're going to be selling the VLO June 56 put, buying the 55 put. There's $1 between the strike prices, so we're going to try and get a 20-cent credit for it. And you will see all these trades in the staged order screen in Option Stalker. So let's take a look at the stock first. Why do I like VLO? Well, first of all, we've got this really nice upward sloping trend line right here. I'm going to click on this low right here. I'm going to click on this low right here. We're going to draw that upward sloping trend line. And you can see that it comes into play right around that $60 level. So we're going to actually be below this upward sloping trend line. You can also see that the stock has some horizontal support right here around the $56 level. So we've got multiple support. You've got the stock closing above the, it didn't close above the 100-day moving average, but pretty dang close, which would also be through horizontal resistance. I think the stock continues to go higher, which is going to help us because then that spread will really shrink in value as the stock moves higher. We may have an opportunity to buy it back before expiration. So let's put up the trade screen. Got VLO. We're going out to the June 5th expiration cycle, and we're going to go down to that $56 put, and we're going to click on that, and we're going to go to the $55 put. Go right there. You can see that this spread is a penny bid offered at 41 cents. We're going to try and get a credit of 20 cents. I think we're in range on this. I think we could get filled on this. And now we're right in the middle. We might need a little bit of help from the stock. Just a little bit of a pullback would help us get a fill on that. But we're pretty dang close on it right now. So I think VLO is going to set up beautifully. If everyone's playing an economic recovery, refiners are certainly going to do well in that environment. So VLO. Trade number 3. Trade number 4, Twitter. We're going to be selling the June 2750 put, buying the June 27 put. We're looking to do a 10-cent credit on this, and there's 50 cents between the strike prices, so that 10-cent credit gets us a 25% return. So if we're doing something that's got 50 cents between the strike prices, it simply means do more of them, because I use a constant dollar allocation for all of my trades. So if I've got a tighter spread between the strike prices, I'm simply going to do more of them because I want to continue to generate that 25% return. Now, one of the reasons that I do like keeping it pretty tight between the strike prices is that as a trader, if I see something happening intraday, I can leg out of the position much easier because the deltas on both positions are pretty comparable. So if I had to buy the 2750 puts in and I saw the stock really pulling back hard, then I know that those 27s are going to gain steam and I'll be able to leg out of it very, very easily. Let's go into Twitter and let's take a look at that. And there you can see, really nice upward sloping trend line here. We'll drop a GTC line. Anytime you see anything like this, where visually you just go, oh, hey, that's a nice trend line, draw it. Just draw it. Click GTC and draw that, because somewhere at some point in time in the future, that line is going to extend out and the stock breaks down below it, and you're going to get an alert and you're going to go, wow, that's a pretty nice technical breakdown. Maybe you're interested, maybe you're not. But when you see something like this, take the 2 seconds, just drop the line, because throughout the course of the day, you're going to start getting all sorts of alerts that pop up. Some of them will be fantastic, and you'll be really glad that you did this. Some of them might be interesting, but you ignore them and you move on. Or sometimes you'll even redraw that trend line. So make sure that you're using alerts. Alerts are just a super effective way to enter trades on the alert and to also manage trades. So I don't like using stops. I'd much prefer to draw these diagonal alert lines. But back to Twitter, it's been kind of a laggard. You just saw how another social media company, Facebook, was blowing through the all-time high. Twitter's nowhere near that. But I still think that social media does very well with the coronavirus right now. Twitter's got a lot of cash on hand. So the tech sector's been hot. I like the fact that the stock is moving higher. I don't feel like we're chasing this stock. It's been in a gradual trend higher. And if you take a look at the 2750 puts, they're way down here below this upward sloping trend line. And we've got support at the 100-day moving average. The stock had really nice volume today, and it was able to break out through that 100-day moving average and through a horizontal resistance level, and it's filling in this gap right here. So filled in the gap, broke through horizontal resistance, above the 100-day moving average, nice volume today, upward sloping trend line that we can lean on, selling a put spread below this. The more check boxes that you have marked, the higher your degree of success. It's all about probability. And it all starts with the market. So we know that the market conditions are favorable for us. We feel that the market's going to be inching higher. Yes, there are some market risks. Yes, there's a lot of optimism out there. Yes, we're probably a little bit ahead of ourselves. That's why we're focusing on selling out of the money bullish put spreads. That's why we're focusing on stocks that have all of these positive criteria that increase our chances for success. And then the really good thing is we're selling out of the money premium, so we're distancing ourselves from the action and we're taking advantage of accelerated time premium decay. If you're watching this video and you don't have a clue of what a vertical spread is, you should really learn this strategy. It's probably what we use 80% of the time when we trade options. 20% of the time we're option buyers, but conditions have to be perfect for that strategy to work out. Almost everyone I know starts off buying options, and that is a really low probability trading strategy because you're constantly fighting time premium decay. But when that strategy is on, it's way on, and you can make a lot of money very quickly if you've got the right conditions. We don't have the right conditions right now. Option implied volatilities are still way too high. So let's continue with our Twitter analysis, and then we can talk a little bit more about that. So I want to bring that trade up. We're going to go into the June 5 expiration cycle. We're going to go down to those 2750 puts, and we're going to click on those, and then we're going to click on the $27 puts. And you can see that that spread is 2 cents bid, offered at 21 cents. We're going to be trying to get a dime for that. Right in the middle. We may need a little bit of a pullback on the stock to be able to get that credit, but that's the extra spread that's the fourth spread that we're going to be trying to get done this week. So we've got the Twitter spread, we've got the VLO spread, we've got the BYND spread, and we've got the Facebook spread. So I think we've got 4 really nice positions that we're going to be entering. Last week we got all of our trades done. So we'll go back into the staged order screen, and you can see we're going to have, now these are a lot of positions accumulating right now, but some of them are going to be coming off very, very soon. So for instance, we're going to be adjusting that Shack trade right there, and we're going to be exiting the, we've already taken profits on the Win trade, and I think, yeah, we had McDonald's and Hasbro are also coming off. So this list is going to be decreased by 4 trades by the end of the week. So that's it. But let's take a look at how we can find some of these stocks very easily, because I want to show you some of the routines that you can be using. And we're going to keep it pretty quick. Pop Bull is just one of my favorite searches for swing trades. I mean, you really don't need much more than Pop Bull. If you knock through this list and you start looking down it, already you can see Crocs. That's really nice. I like Crocs. I love this upward sloping trend line here. I love this breakout through horizontal resistance. I didn't highlight it because it's got to get through these major moving averages right here. So what can I do? Gee, Pete, what can I do? I really like Crocs too, but I'd like to buy it above that 200-day moving average if it can get through. Yeah, so would I. So you click GTC, you find a candle in here somewhere that lines up well with it. Oh, hey, there's one. Double click on it. There's my GTC alert line. Okay, well, I don't want to get that aggressive. Maybe I want to know when it's above the 100-day moving average. Click GTC. Let's click on this one right here. I'm going to get an alert when it gets close to that, and I'll know. And when it gets through, I go, oh, yeah, I remember. There's Crocs. I said I was going to like that if it was able to get through the 100-day moving average. It's that easy. So let's keep going down the list. Let's see what else we've got here. MGM. MGM is a casino stock. Now, I still think that that industry is going to be headed for trouble. Look at this. There's Twitter, one of our picks today. Going to continue to go down. LYV, there aren't going to be any concerts for a long time. VLO, there's another one. Look at that nice little breakout right in there. Intel, oh yeah, nice compression right in here above the 100-day moving average, breaking out through horizontal resistance. Good volume today. Absolutely. Looking pretty good there. Continue to go down this list. UNP, I really like the railroads today. That's a nice little breakout right there, horizontal breakout above the 200-day moving average. KSU, that's another railroad stock. Take a look at crowd, see what that's doing. Look at these stocks in this list. They're all super, super nice. So you may not have to look any further than Pop Bull. Love the stocks in this list. A number of our picks that I found today came right out of this list. So that concludes today's presentation. I'm sorry it ran a little bit long. I'm not going to do a lot of other searches because I had to really address all of the issues that we had with the win trade this week and the updates that I posted. And I also want to make sure that you place that shack order to buy those June 19 $55 calls. We're trying to buy them at $2.50. And when we're filled on that, then we enter the second order, and that is to sell the shack June 19 57.50 calls for $2.05. What happens if we're not filled on the second part of this? I'm very confident we'll be filled on the first part of this. What happens if we're not filled on the second part? I'll keep you updated via email if there needs to be an adjustment, but I would keep trying to sell the 57.50 calls at $2.05 until the video next week. And since all of our trades are June 5 expiration, we've got 2 weeks and 2 days. We're going to keep trying to get these done until the video next Wednesday. So that's it for this week. If you're watching this video on YouTube, please give it a thumbs up if you like the content. But more importantly, this video is posted on Saturdays, 2 days after the fact, because I want to give members a chance to get in. Go back and take a look at each one of these picks. Take a look at my market analysis and get a feel for my accuracy. I think you'll be really impressed. I think you're going to see that the stocks that we're highlighting week in and week out have a really high probability of success. So make sure you sign up for the YouTube channel, turn on your notifications, and that way you'll never miss any of these videos. I promise you, I'll have lots of great trade ideas and lots of educational content as well. That's it for this week. Thank you, everyone. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.